All right, happy Sunday, everyone. How you doing? My name is Clinton, and I'd like to welcome you to my YouTube channel, Blackwing Trading. I hope everybody had a blessed and a restful Sunday, and I am glad that you are joining on with me. I am teaching a series of classes on Sunday evenings called Futures Trading 101, and we are now on episode 2 of Futures Trading 101. My goal in teaching this series of lessons is to take you, maybe a beginner, maybe you're new to trading, you're interested in trading, to take you from a beginner to your first trade. And so in these lessons, we're laying down that foundation of information you need to understand trading. We're going through different various topics to kind of get you up to speed and get you started. And you're not going to be an expert at the end of these lessons, but you will have a foundation for trading and to get started in trading and hopefully take your first trade to get started in trading in the markets. I've been trading for about almost 4 years now. And now I'm a funded trader with Top Step Trading with futures. I trade options as well. And I love trading. And so I want to introduce this to you so that you can see that this is something that's very attainable. Sometimes we see things and we think, hey, that's for somebody else, or I can't do that. Listen, trading is very attainable. There are certain things you need to learn. There are certain practices and principles that you need to put in place, and you need to actually do it. Trading is one of those things that you need to do it to get well at it. But once you do it, you can really increase your financial stability and be on that road to financial freedom. And so we are going to teach a class tonight. I'm going to give it a couple of minutes for people to get in. But we're going to teach a class tonight on the types of futures markets, And so we're going to go into that. Once you're on, let me know that you're on in the chat. I see you, Joey. Thanks for being on. I see you, Miss Cora. Thank you for jumping on today. If you're here, just let me know you're on and say, hey, I'm present. Say hello or something like that. I love to have your interaction, and it actually does help the channel as well. So let me know you're on if you've jumped on the stream so far. And we're going to go ahead with that. We're going to go ahead and get into going to our PowerPoint lesson here. All right. Hopefully everyone can see that. Like I said, episode 2, types of futures contracts is what we're going to be talking about on today. This class is going to run somewhat about an hour or so. Also, I want to say that if you have any questions, please put them in the live chat. I'll see those questions, and hopefully I will answer that for everybody. So somebody else may have that question. So if you have any questions, I'll put them in the chat. But if you remember something later, I am archiving all these lessons under a playlist on my YouTube channel, and it's under Futures Trading 101. So you'll be able to go back and look at it again. Or if you have any other questions, I'm going to pin my email in the comments so that you can send me an email and I answer that question as soon as possible. Or if I don't know the answer, I'll make sure that I find out the answer so I can get it to you to help you along your way. So we are in episode 2 of types of futures contracts. All right, so this is from last week. If you were on the class last week or you watched the class last week, basics, what is futures contracts? A futures contract is a financial instrument that allows participants to either offset or assume a risk of a price change in the asset over time. When we talked about hedging versus speculation, if you're a hedger, you're trying to offset the fluctuations in prices. If you're a speculator, you're trying to make some money off the changes in prices. But a futures contract is a legal agreement to buy or sell an asset. All right. So contracts are agreements to buy and sell at a certain price, a set price, and then on a future date. And so those are kind of two of the primary characteristics of futures. Another characteristic is that they're standardized. People trade futures contracts in the U.S. futures markets all around the world. And so there are set standards so that, we're not talking a different language when people all around the world are trading futures. There are certain things that are specific to futures, and we're going to go into that in these series of lessons. Some of it we're going to talk about today that make them standardized, and so everybody knows what they're dealing with. And they're traded on futures exchanges. And, the exchanges, you need to view that as the marketplace where everybody goes to trade futures, So those are some basics about futures contracts that we covered last week. All right. So understanding different futures markets. I wanted to teach this class because futures are not like stocks and other things. one of the significant things about futures is that the futures markets are not uniform. What do I mean by that? There are differences according to the commodity traded. So if you're trading agricultural futures, those things look different than equity futures, and they look different than precious metal futures, or look different than any other different types, battery futures, battery metals futures are different types of things. So the futures markets are not uniform. If you're in a stock market and you're trading stocks, well, even though companies are different, it's all based on the US dollar. The changes that you see in a stock is going to be based on, our dollar system in cents. And so, a move up in any stock, no matter what that stock is going to go by the US dollar. So, it's going to be $750 and it moves up to $750 and 1 cent and 2 cents and 3 cents and 4 cents. Well, futures actually move completely different than that. And then depending on the futures market, they may move different. Another thing that's different about the futures markets is that there are different type of futures contracts for the same type of commodity that you're trading. So, for instance, if you're trading stocks, if you're trading Apple, well, there's not different types of Apple stock. There's only one Apple stock. Well, if you're trading futures, for instance, like if you're trading gold, you might trade regular gold futures, you might trade gold kilo futures, or if you're trading index futures like I trade, you might trade the S&P E-mini, or you might trade the S&P micro futures. And those things are completely different. They have different monetary value, even though the chart looks the same. They're actually a different type of futures contract. And so that's something that we need to understand about futures as well, that there are different types of contracts, even for the same commodity. Another thing we need to realize about futures is that the contract units and the price fluctuations vary per futures contract as well. And so that's not based like on the US dollar. We got into that a little bit last time when we were talking about wheat futures. And so futures, they change according to the US cents. And so even though, for instance, it's not uncommon to see a wheat futures, you'll see 539. Well, that's not $539. That's 539 cents. Well, really that's $5.39. But, it moves according to a set standard that was set a long time ago. Many of the futures market has been around for a very long time because we've been trading commodities for a very long time. And so a lot of these standards were set in place a long time ago and they never changed. And so that's why you have to know the differences in the futures types of markets and contracts and how they move. So why am I saying that? What's the most important thing I want you to take from this? Many futures traders and retail traders like you and I, if you're interested in trading futures, you have to understand that many specialize in a limited number of markets so that they develop expertise in all its nuances. So, for instance, I only trade equity futures because I'm very familiar with them from trading options. I know how equity futures move, whether it may be the S&P 500 futures or the NASDAQ futures or even the Russell 2000 futures. I understand how equity index futures move. There are some people that only trade agricultural futures and they're experts in those things. There are some people that only trade like energy futures, like oil and natural gas, and they're experts in it, and that's what they do. And so people usually become an expert in just either a category of markets or maybe one type of futures product because each one has its own feel. It has its own nuance. It has its own way of how it moves and things like that. And so a person would specialize just in one, which may be a difference from stocks. You can trade, once you understand the principles, you can trade any type of stock. The price may be different, but you can trade all of them because they're moving kind of in the same fashion, where with futures products, they're a little bit different. So where do you get information from? So the CME Group is an amazing free resource for education on the futures markets. I have the links down in the description. I'm going to show you those websites here in a minute, but the CME Group is, the premier entity for derivatives trading in the United States. It's made of 4 different types of markets. and they're all together for the CME Group. But that is a perfect resource in the hub to find out information about futures and how they move, how they settle, how they pay out, and all those things. And we're going to talk about some of those in this lesson today. But this is a resource that you need. And so I put it in the description in this lesson. Down in the description, you'll see 2 links. You'll see one that says the CME Group website, and you'll see another one that talks about the CME Group Education Index, where it talks about the different courses. So let's just get into that now, because I want to show you that. All right, so this is a website for the CME Group. If you want to type it up, if you're sitting at your computer or something, if you go to cmegroup.com, you'll come to this website. Or if you press that link in the description, you'll come to this website. And this is the website hub for the CME Group. And this is all things futures trading. The first get started, I usually start at the top here on the top menu, and you go to markets. And so when you go to markets, it tells you about the different markets for trading futures. So if you're interested in one type of product, maybe you're interested in corn, and you're interested in soybeans, or maybe you're interested in WTI crude oil, maybe you're interested in energy futures and you want to trade oil, you can click that particular product and it's going to take you to the website for that page. So like if I click oil, it's going to take me to WTI crude oil futures. And then I just scroll down. It's going to take me to information about the different types of futures. And then, all types of information that I can begin to look at on this website right here. And then it talks about different brokers and how they trade. And you'll see a bunch of information about resources that you need, research products, and all those types of things. Like I said, this website for the CME Group it has all the information that you need to begin to educate yourself about trading futures. About trading crude, you have different type of classes that are in here and everything. And so that's what you would do if you're interested in one particular type of product. Or you can go back here to go to markets, where you're going to go to groups. And so that's what we're going to do today. We're going to look at specific groups, but you can look here and see the different types of groups of futures. You have agricultural futures, crypto, energy, and we don't talk about all these here. But if you're interested in that particular group of products, you can just click that, and then it'll take you to that. And then even over here on reference, it'll show you some good reference information that you may need to research futures, or maybe you're looking up some rules or something. That's all there. Another good page is this education page. If you click here, it takes you to courses and lessons and things like that, where you can look at, different types of lessons. There's a whole curriculum of lessons for the futures. And so I want to take you to that there, which is the second link that I have in the description, which is the lesson inventory. So say like you're brand new to trading and you want to look up, a particular type of product. This inventory, which is a PDF page, it's a linkable PDF page. So you can click it and it's going to take you to all the courses under that particular product that the CME Group has for that futures market. So you can see here, I'm under natural gas. So you have introduction to natural gas. It's 10 lessons, and you got the natural gas overview, understanding Henry Hub, understanding all these different things. You can click it. And the cool thing is if you click this link here in this PDF, it's actually going to take you to the page where you can begin to start looking at the video for that particular type of futures product. And so a great resource to have in your inventory, a great resource to have and to put on your page, some type of link or something like that, so you can be able to resource this if you want to trade futures. There's a table of contents at the top. So if you go to the table of contents, this is linkable as well, even though it's not highlighted. But if I click, any one of these, if I click any one of these things here, if I go to ag futures or something like that, if I go to introduction to dairy, it's going to take me to all the classes that are introduction to dairy futures, grains and oilseed, agricultural, dairy and livestock. And it's going to show me all those lessons right there. So this is a very useful inventory PDF. That's, if you just click it, it's going to take you to the resource that you need. And so I wanted to make sure that you had that for this lesson, because this is something that you would use in the future. All right, but getting back to the PowerPoint, I want to make sure that you have this link for the CME Group. So make sure you're looking at description and use those links. All right, so we're going to get started talking about agricultural futures. Self-explanatory things that come out of the ground are agricultural futures, but it also is related to, livestock and things like that. So examples of agricultural futures: corn, wheat, soybeans, coffee. People drink a lot of coffee, cotton, livestock, cattle, lumber, grains, and oil seeds. All those are agricultural futures. Now, when you're trading agricultural futures, there's one thing you need to understand. That they're susceptible to price changes due to economic policy and regulations. One perfect example of that is what we have going on in our country right now. Since we have cracked down and have a very strict immigration policy where we're deporting a lot of people, a lot of immigrants. So immigrants are usually people who are working on farms that are bringing about a harvest for these different type of agricultural products, whether it be corn, wheat, almonds, strawberries, or whatever fruit or whatever product may be. And so since there's not enough people, the farmers are running into labor issues where they don't have enough people to work on the farms. And so their products are going to be left. They're not going to be able to be harvested in the harvest time. And so if they're not able to be harvested, that means that there's going to be less product. There's going to be less product out on the market, which means that demand is going to go up. And that means that the prices are going to go up because you have less product on the market. The other way around would work too. If there was an influx of a lot of product of one particular product, like if it was corn or wheat or whatever it was, if there was an influx of that and too much on the market, that would drive the prices down. But, because of our policy, economic policies and immigration policies, we're probably going to have an increase in all these types of agricultural products because we don't have people to work on the farms to be able to do that. And so, as that's one example in real time of how agricultural futures can be affected by economic policy and regulations. But they're also susceptible, if you're trading agricultural futures, they're also susceptible to price swings because of weather patterns and natural disasters like flooding. And so you'll see that a lot in agricultural futures because, this is something, like we said, growing out of the ground, corn, wheat, lumber, things of that nature. And so they're going to be susceptible to forces in nature. And so if you have forces in nature that destroy certain products, you're going to see that the futures are going to go up because there's going to be less supply, which means if there's less supply, there's more demand, and that can drive prices up. And so as a savvy futures trader, you will be paying attention to those things so you can know how to place your trade. So, thinking about the immigration policy, if you think that there's a certain agricultural product that we're not going to bring that much to harvest, you might want to go long on a particular agricultural product because you think the demand is going to go up. That means that the price is going to go up. So you buy it while it's cheaper now, but then when the harvest time comes, you know that price is going to go up so you can take advantage of those changes in policy. The last thing I want to talk about in the agricultural futures is that it's an international market. And so, futures, like I told you, is traded all the way around the world. And so if you go to the CME Group and look at the different types of markets, you might see, cocoa beans in Colombia. You might see wheat in the Black Sea wheat or Chicago wheat. And so there's different types of futures according to different places in the world that you would have to pay attention to for the agricultural futures. All right. Next type of futures, energy futures. And so energy futures are things like natural gas, oil, things of that nature are energy futures. You have even heating oils, like kerosene or something like that, and gasoline. Energy futures are very popular. And so many traders trade energy futures due to the breadth of market, because energy futures is a trade worldwide because energy moves the world worldwide. Everybody understands that energy moves the world. And so there are a lot of people trading energy futures because it affects everything. It affects, production, and it affects manufacturing, and it affects trucks up and down the road. It affects you and I when we go to the gas pump. And so energy futures are big all the way around the world. So many people are trading in energy futures. Energy futures are very susceptible to regional and world conflicts. And so if you're interested in trading energy futures, especially oil, is very susceptible to some type of conflict happening in the world. And you'll see various price swings and spikes because of things that may be happening in the world. So, for instance, the price of WTI crude oil is something that spiked to almost $80 a barrel during the conflict between Israel and Iran, because Iran controls the Straits of Hormuz, and so most of the oil coming out of the Persian Gulf has to go through the Straits of Hormuz. And so energy traders were a little bit nervous about that, because what if they close the Strait of Hormuz? Then you decrease the amount of supply of oil. That's going to increase the demand. That means that the price is going to go up. And so when you have regional conflicts like that, a lot of things happen. Especially same thing happened when we had the conflict with Russia and Ukraine. The price of natural gas went up because Russia produces a lot of natural gas, and there's a pipeline actually through Ukraine as well for not a natural gas that flows to the rest of Europe. And so those natural gas futures prices went up because now there's a conflict between two countries who control a lot of the natural gas coming through the region. And so energy futures are very susceptible to like regional and world conflicts, especially war or fighting, anything like that. You will see a lot of price spikes and changes. Energy futures is also susceptible to weather patterns as well, especially natural gas. And so, if we have a cold front that's longer than what we thought, you may have a few days where the prices is spiking or changing faster than what you thought because of the energy futures prices is changing, a lot quicker than what people expected. And so you'll see that, cold weather may cause the price of natural gas to spike for 2 or 3 days and hit a high. And then once that demand is down, once that cold front moves through, then the price goes back to normal. And so as a savvy futures trader, if you were trading natural gas, that would be something that you pay attention to. Say, okay, hey, we got a cold front on the West Coast a lot longer, or on the East Coast a lot longer than what we thought. And so, hey, we need to make sure, let me take a trade to where I can take advantage of these price fluctuations. Or, if you have something going on with, maybe hurricanes or something like that on one part of the world, that would be one thing that you would pay attention to and look at because the price of futures are changing according to what's happening with weather. All right, then we have metals futures. Gold, silver, and platinum. Those are called precious metals. We have our base metal futures, is copper and aluminum. Then we even have ferrous metals. Ferrous is referring to iron. So you have like hot rolled steel futures, ferrous scrap futures. You have iron ore futures. You have battery metal futures, where you talk about cobalt or lithium hydroxide, lithium carbonate futures. And so all types of futures are trading in the metals. And the base metal futures, now copper and battery metals futures are increasing dramatically due to the pervasiveness of electronics. So, in our cell phones, we have gold and copper and silver and batteries. Every battery now that we use is a lithium based type battery. And so those type of futures are spiking because there's so much demand for them now that is even surpassing some of the other futures in the market just because of what we're doing. And then now with the EVs and things like that as well, lots of copper futures and things like that are going up because with the demand for electric products, these metals are in high demand. And so the market wants to control those prices and make sure that everything is working according to the way it should because of the changes in these things. So you have those metal futures. And then there's an increase in demand for ferrous scrap due to recycling. That is something that I was unaware of. But since there's so much recycling now, they're controlling the futures for scrap metal because people are taking those scrap metals all the way around the world, no matter where it may be, and they're bringing them into their production and manufacturing capabilities to rechange it and repurpose it to something else. And so there's a market for recycling ferrous types or metal types of futures. And so this may be something that you're interested in, in the metal futures. The metal futures, you have to make sure that you look at how they're traded. because each one is a little bit different. And then you also need to look at different regions of where they're traded at. So, for instance, the lithium and cobalt, Africa is a big market for, especially for cobalt. Africa is a big market. There's some of those African countries like the Congo and next to there are big markets for these type of precious metals. And so if there's any unrest in those areas, that may change the futures market, just like raw or anything else where we talked about oil. So you pay attention to metals futures. Another thing that's interesting about metals futures, especially gold, whenever we have a market downturn or something is happening, a lot of investors like to invest in gold. And so if we have something that's happening like a few months ago in April when we had the tariff liberation day by the president and the market started dipping low, and people were selling equities, they were selling stocks and all those things. Well, they took that money and put it in gold, and gold hit all-time highs during that time. And so if you're trading gold, a lot of people just trade gold and they pay attention to the economy because it has almost an inverse relationship. If the economy is going up, there's less investing in gold, but the economy is going down, there's more investing in gold. So those are things that you want to pay attention to when you if you're trading metals futures. All right, something else we have here. We've looked at this on my channel. If you've seen me trading, I trade is under the category of financial futures. And so I trade the equity index futures, the S&P 500 and the NASDAQ futures. But you can also trade interest rates, futures, U.S. Treasury notes. You can trade futures on those notes, or you can be anticipating where you think those rates are going. Some people trade those futures. You can even trade FX futures if you want in the Forex market, foreign exchange market of the euro versus the yen, the Great British pound and all those things. And so they have futures even on those products as well, of where you think a particular currency is going to go. So if you have some type of interest in foreign currencies and things like that, or maybe you follow the economics of different types of countries, you may want to trade futures in the euro or the yen. And another thing that we pay attention to is that the world is connected. And so like right now with this big, beautiful bill going out, the United States is going to increase in debt. And so with the increase in debt, that's going to affect our interest rate. So, you might want to take some trades in the U.S. Treasuries, or whoever is buying our debt, their interest rates may change. And so that's something that you may want to look at. But as I said earlier in the slides before, with these financial futures and any other futures, you want to specialize in it and look at it and really research it before you begin to trade it, because there's different nuances to trading financial futures as well. And there's also different time frames. And so financial futures don't move as quick as maybe equity index futures. And so you might want to be in those trades for, a couple of days, couple of weeks at a time. Whereas, I may trade over a day or two in the index futures. Somebody else may trade, a longer time frame, but you might want to look at what your time frame is going to be in the financial futures, because they don't move as quick as other types of futures, especially for the Forex and the interest rates, not as much as for the equity index futures. There are single stock futures. Cryptocurrency futures. I'm sorry. Cryptocurrency is currently becoming a recognized asset and is going to continue to be legitimized over time, in my opinion. And so you can actually trade futures on cryptocurrencies, on Bitcoin and Ethereum right now. In Solana, you can trade, in XRP, you can trade futures on those particular products. You can't trade it on a lot of different products because the market is not there. But Bitcoin is well established. Ethereum is well established. XRP is well established. And so the futures market is increasing as those things grow, and you can invest there. So you don't even have to hold the asset, and they're traded on most major exchanges, and you can go to a broker and trade those futures. Like on my particular broker, Tasty Trade, you can trade Bitcoin futures. You can trade them on, I'm a funded Top Step trader. And you can trade Bitcoin futures with Top Step. And so you would have to look at your broker to see if they carry your particular product, but you can trade those futures. All right, so next we have single stock futures. Those are based on individual stocks. And these are usually going to be reserved for those large cap or mega cap stocks. A lot of those mega cap stocks, meaning they have a large market capitalization where, they're $1 trillion, $2 trillion, $3 trillion companies that have a lot of market share. A lot of them have single stock futures. Names that come to mind is like Apple and Tesla. They have single stock futures that they're traded on. So some people specialize just in that one stock that they're trading futures on. They're less common, but they offer stock level speculation or hedging if maybe somebody is heavy in that particular stock. Now, you will see most people trade the index versus that one single stock, but those things are open as well if you want to trade a single stock future. All right, so this next thing is really important. We want to spend some time here. Micro versus mini futures. So the mini futures, this is how it breaks down. So options contract, a futures contract is going to be based on a particular size. Like we looked at wheat, for instance, it's based on 15,000 bushels, 136 metric tons. Okay. So if you actually calculate the product of that item, that may be worth $60,000 or $30,000 or whatever it's worth. So the mini contract is going to be worth 1/5 the size of a standard contract. So it's going to be worth 1/5 of that. So if your particular product that you're trading, just to make the math easy, is actually worth $100,000, a mini contract is going to be worth $20,000. And then the micro is going to be worth 1/10 of that size. And so, your mini is worth $20,000. If you're trading the micro, your micro would be worth, divide that by 10, it's going to be worth $2,000. And so many people trade, what's the importance of the mini and the micros? Many people trade the micros versus the mini because they're worth a lot less money. So let me show you that here in the equities futures. We go back to the equities futures on the webpage there, and we go to those markets. I'm going to show you how that actually plays out. So we're on the equity index futures options page. And so we're going to go down to the particular products. So we have the S&P 500 mini. Here you see E-mini 500 futures, and here you see micro E-mini 500 futures. Well, let's go to the E-mini, which I told you, which is 1/5 of the size. So if we go to this, each one of the futures products is going to have a separate landing page like this. And so this is for the E-mini futures. If we go to this tab that says specs, it tells you all about their product. And so now these two are the same thing. The E-mini and the E-micro, the chart is the same, but the size of the contract is different. And so you want to pay attention to this. All right. So it's based on US dollars and cents on a point index. The times are all the same. But look at this. The minimum price fluctuation is 0.25 index points, and that equals to $12.50. $12.50. That's for the mini because that's a larger contract. So it's worth $12.50. But if I go back and look at the micro, we go back to the micros page. So the micro E-mini S&P 500 futures, if I go to specs, it's based on US dollars and cents, but we can see it moves at 0.25 index points. But you can see that's only $1.25. And so the micros market was actually created to get more retail traders like you and I into trading futures, because futures, you can see I trade the E-minis. 1 point on the E-minis futures is $50. And so if it moves up 10 points, that's $500. If it moves down 10 points, that's $500. And so you have to have more capital to trade that. But, for the regular person like you and I, it's only $1.25. So if it moves up, at 1 point is going to be worth $5 versus $50. So if it moves up 10 points, that's $50. It moves down 10 points, that's $50. Well, that's something that's a lot more attainable for somebody who wants to get into trading, to trade the micros versus the minis. Does that make sense? And people do that to be able to move up. The beauty of trading the micros is that you can trade the micros, and since it's the same trade, once you have more capital and you scale up, then you trade the minis because it's the same trades, the same charts, it's the same movements, the same numbers. And the only dang difference is the value of the contract. And so you got to pay attention to mini versus micro. And not all futures have minis versus micros, but the ones that are more popular have mini versus micro. So like if you look at oil has minis versus micro contracts for oil and natural gas, mini versus micro, because it's a more popular market where more people want to trade it. And they're going to have mini versus micro. But the micros I highlighted down here are ideal for new and small account traders. And that, like I said, that can be you. Once you get into trading, once we get to the later lessons and we start setting you up for your first trade, I'm going to recommend that you look at these products that have micro products, because that way you can get in with a couple of $100 and you can start trading, and you're going to use a small amount of money to make your mistakes and learn and get good at trading versus trying to trade these bigger products that you can lose a lot of money really quickly. And so the micro is a lot better for newer traders and small accounts. I mean, you can trade those. So some people you can make a very decent amount of money trading, the micros, if that's what you want to stick to as well. Most futures brokers let you trade a lot of micros. And so they can tell you the specifications on that, but many of them will let you trade the micro contracts. All right, so we go back there, and then another thing I wanted to point out to you, not only mini versus micro, but the futures contracts are settled differently as well. So you have cash settlement versus physical settlement. So physical settled items, a lot of the agricultural futures are physically settled, but other ones are physically settled as well. That means that if you enter into that futures contract and you take it all the way to the end of expiration for that contract, like I said, a futures contract is a legal agreement to buy a particular asset at a set time on a set date. And so you actually, if it's physically settled, you actually would take delivery of that product based on how many futures contracts you bought. And so to make that a little bit more real, we'll go to look at the futures markets, and we can look at what some of those deliverables are. Now, most of them are not going to let you, most retail brokers, they're not going to let you take delivery on those because they know that you don't have the capacity to receive these things. But like, for instance, let's go to I'm going to show you the energy futures. If we go to energy futures and say you're trading oil, WTI crude oil. Okay, so let's go to oil futures. So a contract size for oil futures is 1,000 barrels. Now, barrels are 55-gallon drums. And so 1,000 barrels. If you trade one futures contract and you bring it to settlement, physical settlement, then you're going to receive 1,000 barrels of oil. And I don't know anybody, who can receive that. Maybe you got some large warehouse or something like that. But if you took this all the way to the end, you can see here where it says settlement method. It says a deliverable. That means that you're actually going to receive that product. So hedgers, like I talked about in the first lesson, people who are actually taking delivery on things, they want to take delivery on it because they've bought a futures contract to basically adjust their price and offset their costs and everything so that they can take delivery of this particular product at a set price. And so they will work out all the logistics to be able to take delivery on a particular product. So, but for most brokers, going back to what we talked about, they're not going to let you take delivery on 1,000 barrels of oil because they know that you're really a speculator, a retail trader. So you don't have the logistics to receive those things. So what they would do is before that contract settlement comes to an end, they would actually probably send you some emails or something like that to remind you. And then they would literally close out that contract for you before the expiration of that contract so they can prevent expectation of delivery on that contract. And I hope that makes sense. But a lot of, like I said, the different types of futures contracts are deliverable. And the way for you to see it, we can go back to the oil futures again. If you go back here to settlement period method, it'll say deliverable. But if it's a cash settlable, which is the next thing, it's going to say cash. And so cash settled futures are settled based on price differences, like the index futures and things like that. So if I take you to the index futures, we can go back there. Equity index futures. And we go to specs on the equity index futures. You can see here where it says settlement method, it says financially settled. That means that you're going to receive the price difference in that contract size, And so your brokers, if you don't have enough money to physically settle those futures contracts, they'll also close those contracts out as well. But if you have enough money in your account and you can take physical settlement, you can take financial settlement, they'll let it financially settle for you as well. So, but that's the difference in futures contracts. You have cash settlement versus physical settlement, and you have to know what you're trading. Like I said, there is a safety net for you in your broker. If they know that you're trading something that they know you can't take physical settlement on, they'll sell it for you before you hit the expectation of delivery. But other things, like those cash settled or financial settled futures, there's going to be, you get the change in price difference in those things. And most retail traders close before expiration. And so that's something that you want to pay attention to when you're trading futures. All right, so I'm about to wrap up the class here. Hopefully this is something that you got some value out of. If so, please hit that like button, hit the notification so you can know when the other classes are coming. But the key things that I want to settle out as we move to the last slide here is that there are a wide variety of futures contracts across asset classes. And so in the context for what I'm teaching on this channel, you might say, okay, so what should I trade? Well, it's really up to you. What are you interested in? Are you interested in energy futures? I stay in Houston. So Houston is the energy capital of the world. Maybe, you're interested in energy futures. You stay here in Houston. Maybe you even work for like an oil and gas company. Maybe you're interested and you have some education on oil and gas. Okay, trade energy futures. Pick one. Maybe you trade oil. Maybe you trade natural gas, or you trade something like that. Maybe you're interested in, the agricultural futures, something a little bit different. So you pick one of those, or you trade equity index futures. Like I trade, you want to, be able to look at the markets and trade those futures. The key thing is that you really need to just really pick one. I recommend that you don't pick a bunch of them, especially if you're new to trading. I recommend that you just pick one. Just pick one and then learn everything you can about that one particular futures product and learn how to trade that particular futures product. Now, the micro contracts make trading more accessible. I mentioned that. So if you're trading, if you're new to trading, I recommend picking a popular futures contract traded project that has micro contracts. So a couple of them is the S&P 500 has micros, the NASDAQ has micros, the Russell 2000, those financial equity index futures are very popular. So they have micro contracts. Oil and natural gas are very popular. So they have micro contracts. Even some of the agricultural products have micro contracts because it's very popular. So you want to look, if you go to the website on the CME Group, see if it has micro contracts. If you see micros, that means it's going to be a tenth of what the normal contract size is. And that means that it's not going to cost you as much financially to trade those things. And I would definitely start there. And then make sure you understand the type of settlement before trading. Even though your broker is going to close it out for you, you still want to know that. Just so you're being savvy and understanding what you're trading, that you don't want to take it to all the way to physical settlement. You want to settle those contracts out before they physically settle. So wrapping it up, this has been lesson 2 in understanding futures and futures trading one-on-one. See me next Sunday for lesson 3. We're going to be talking about looking into the particular futures contract and looking at the nomenclature, looking at how they're standardized, and also looking a little bit at the markets, the particular markets that they trade on. And then we're going to talk a little bit about the brokers, but I'm going to also talk more about brokers around about lesson 6. Where we talk about futures brokers and where you can trade them on and what you're going to do. But this is a foundation for knowing what you're going to trade. And I would recommend as a call to action that you will look at the futures and pick one that you might want to trade and then start to research it. Go into those links in the description, go to that CME Group, go to that inventory of classes, look at those classes, and then look at some of those videos so you can get up to speed on trading futures. And so until we meet again, I hope you have a happy and blessed Sunday. Thank you for joining on with me and getting on this stream. If you have any questions, put them down in the comments. I'll answer your questions. And if you want to see this class again, all you have to do is go into a Futures Trading 101 playlist, and then you can click this class again and recommend it to somebody as well.